I am absolutely shocked by the reactions of the bears and the media to Tesla's price cuts. I was expecting a fight. I was getting ready when I woke up today to fight, and all I see is this: Tesla turns up heat on rivals with global price cuts. But then I really brace myself. I go to Twitter and I check out what Gordon Johnson is saying, and here's what he's saying about the price cuts. This is from January 11th. He's saying nothing! Nothing! I am seriously so surprised by the lack of FUD today about Tesla stock. At first, Tesla dropped 5.5%. Well, I was expecting more, really. But then it started going back up, and it finished the day being down only less than 1%, not even 1%. So let's see, how is everyone actually reacting to these price cuts? There are some reactions. Some analysts cut their price targets for Tesla stock. Let's see who they are, and do they have any credibility is really the most important question. There's one analyst, Ronald, here. He downgraded Tesla to sell from neutral with a price target of $89. They do have quite a bit of assets under management, so this does mean something. But I can't find him on TipRank, so I don't really know how credible he is. Then we have Colin from Wells Fargo cutting his price target from 230 to 130. Looking at his tipranks.com account, it does not look exactly good. You would be better off just buying S&P 500 and doing absolutely nothing. And then we got Itai, who changed his target from 176 to 140. The rating is still neutral, though. However, I personally remain really bearish on him. Yeah, better just buy S&P 500 instead of following his advice. And that's it. No more. Everyone else is reiterating their price targets. I haven't seen anyone else at the time when I'm recording this video. This may change a little bit, sure. Also, I haven't seen many people talk about this after the price cut. Tesla is well positioned to take advantage of these battery credits. This is basically if a government giving cash directly to Tesla, because assuming that the batteries would be produced based on the requirements, which Tesla believes it will be able to meet all of these requirements, except maybe if batteries are sourced from China, then of course no, but we don't expect that to be the case. Or a problem for most of the vehicles. So if we look at the Model Y long range, that is extra $3,690 that Tesla would not have had before. So this is, of course, quite exciting. Also, if you believe in full self-driving, then you will welcome these price cuts as a big positive thing. Let's see if the uptake is also going to get higher for full self-driving. Now, that may not be because the people that will be buying Teslas now, maybe they are not as affluent, and FSD is $15,000, but certainly some of these people will give it a try and go for the subscription, which is much more affordable. But either way, once full self-driving is solved, because we will have more cars on the road, it will make sense for pretty much most people to buy full self-driving. RBC Capital analyst Joseph reiterated his outperform rating and 186 price target on Tesla. Here's the whole article if you like to see it. How are retail Tesla stock investors responding to these price cuts? Well, generally, quite positively, of course. Steven is positive, like always. Seems like expectations are not really changing. The accountant is quite positive about these. He's specifically only using Model Y long-range sales in the US, and he's projecting a 60% increase in profit, as you can see right here. It appears to me that retail Tesla stock investors are taking this news of a price cuts very positively overall. And I'm also seeing former Tesla bulls that cashed out that are now going back in again. Kathy Wood is taking the news very positively. Now that supply chain bottlenecks are diminishing, Tesla can cut prices in line with battery cost declines, driving demand while limiting the impact on profitability. According to Wright's law, battery costs drop 28% for every cumulative doubling in unit production. And she's saying that according to ARC's research, Tesla's batteries are 3 years ahead of the competition in terms of cost for a given range and performance. And Gary Black is saying that if analysts actually run the Tesla volume pricing margin math, they'll see these price cuts don't materially impact Tesla's valuation. But that requires them to do math, Gary. That's a tall task. And here's the press release from Germany, from Tesla. And basically all they're saying is that we are reducing the prices based on reducing costs. And Farzad did a great comparison here of all of the competition. He sorted everyone from the least doomed to the most doomed. You may pause the video here if you'd like to take a look a little bit longer. But I think this number is the more important number right here, because you got some pretty cheap EVs here, like the Volkswagen ID4. But then you look at the range, only 209 miles? Who's going to buy that? That's too little. And also look how slow it is. And of course, you are not getting the Tesla supercharger network. So if you actually want to go anywhere with that little range, yeah, you're not going anywhere. There will definitely be complaints about customers that bought a Tesla vehicle recently. But here's the thing, when prices go down, those who already bought want the lower price. But if prices go up, those who already bought don't want to write Tesla a check. And here I finally found a post from James with his updated numbers, and literally nothing changed in terms of earnings. This is what I keep seeing over and over again with all of the retail analysts. To me personally, because I'm such a big believer in full self-driving, I mean, just take a look at this video from Hallmark's catalog YouTube channel. And because I believe it is going to be solved, to me, this is actually quite bullish, personally. If you don't believe in full self-driving, then maybe you would have a different opinion. But to me, I want the most cars on the road so that we can achieve full self-driving as fast as possible, because more cars on the road with full self-driving means we have more data, so we can solve it faster. Oh, and by the way, if you watched yesterday's video where I compared BMW X3 SUV to the Model Y, I did not even add the fuel savings. It already really does not make sense to get any other equivalent gas-powered vehicle, but when you add the fuel savings on top of everything, it is just absolutely absurd not to get an EV at this point. And let's take a look at what Tesla's inventory is looking like after these price cuts. But keep in mind that this data is a snapshot gathered once per day in the early morning. And the price cuts went into effect yesterday late in the evening. So I wouldn't really expect any change yet. But we already see a trend that is trending downward. And we can see the exact same thing with the Model Y as well. That was the Model 3. You can see the same thing as well. So it will be really telling to look at this tomorrow once we have a more complete set of data that is a better comparison. And here are a few good charts from Electrified YouTube channel. When we compare the current price of a Model 3 rear-wheel drive in the United States, when we compare it to 2021 pricing, we will then see that it is still 16% higher. And then we look at the Model Y long range, and we will see that right now, compared to 2021, it is also still 6% higher. Tesla held gross margins that were over 20%, while Model Y long range was at $47,000. And remember, now we have IRA credits on both the consumer side, meaning the $7,500 credit, and the producer side, meaning the battery credits that I mentioned earlier. Tesla Daily YouTube channel has the easiest charts to understand. visually right here for Model 3 and for Model Y right here. And here is how pricing changed over time. I would expect a hit on automotive gross margins, but if you look before 2020 Q2, even at these much lower prices, our gross margins were still pretty high. And Elon Musk keeps saying that he's seeing deflation in commodity prices. So if that trend continues, then it is not completely unreasonable to expect that we would achieve these higher margins even at these lower prices. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.